Good morning, everyone. This is Marshall Giller bringing you the morning comment for January 21st. Well, dollar CAD finally broke through the 120 barrier overnight as manufacturing sales disappointed and prices of Canada's commodity exports, such as oil, natural gas, and lumber, fell further. This sets up a dovish background for the Bank of Canada meeting today. The market's already pricing in some small chance of easing by the end of the year, which is in contrast to the tightening expected in the U.S. I believe dollar CAD can move still higher. The Bank of Japan cut its inflation forecast. That's an admission that they're not going to hit their 2% target in time. This increases the likelihood of further stimulus at some point, which is negative for the yen. The market doesn't believe the Bank of Japan will hit its target in the next 5 years. As a result, I think the market's likely to expect further easing by the BOJ, and that should keep the yen under pressure. Unless, of course, the BOJ decides to follow the Swiss National Bank and just give up. I wouldn't expect them to take such a radical step, but then again, Switzerland isn't known as a hotbed of experimental monetary policy either. The New Zealand dollar fell as prices fell slightly on a quarter-on-quarter basis in the fourth quarter. However, I still feel more optimistic about the Kiwi than about the other commodity currencies. Yesterday's milk auction came with a higher price for the second auction in a row, in contrast to what's happening with industrial commodities recently. Kiwi dollar may be headed lower, but so too is Aussie Kiwi, in my view. Today's highlights. Today we get the minutes from the latest Bank of England meeting. The focus will be on the number and the names of the dissenters. We're especially waiting to see how the hawkish new member, Kristen Forbes, voted. On top of that, the UK employment rate's expected to have declined, while average weekly earnings are anticipated to accelerate, suggesting less slack in the labor market. Overall, this could be positive for sterling. In the U.S., we get housing starts and building permits, both for December. Both figures are expected to rise and to keep the dollar supported. In Canada, as I mentioned, the Bank of Canada is expected to keep its benchmark interest rate unchanged. The bank may revise down its forecast. This is likely to keep the bank on hold for longer than they would be otherwise. There may even be some discussion of a rate cut. This is likely to leave the CAD vulnerable, in my view. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.